Hello everybody and welcome to the midweek market update from Smack the Markets for the 10th of June. So this week has been rather sort of challenging in the markets. We've had risk sentiment switching from positive to negative pretty much sort of every day as the week's progressed, and today of course later on we've got the FOMC interest rate statement and accompanying meeting, so that's likely to be at the forefront of traders' minds throughout the remainder of today's trading session and may well have quite an impact on the markets as well. So let's take a look at a few markets that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So if we take a look at the Dow first of all, on Monday we were looking for the market to continue the upward move up towards the sort of 27,500 area. It achieved that. We've had the retracement and now the market sort of moved back up again. Now at the moment we've got an intraday level around 27,400 and there is the levels up here around 27,500 to 27,550. If I show you this on the 60-minute chart, you can see the sort of 27,550 up here, where the market sort of found key resistance in the past. So at the moment here, what we're looking at is we're always sort of tentatively cautious with these markets at these levels, because there is like a lot of people and a lot of analysts are predicting at the moment, there is a lot of bad news yet to sort of come out once it's reported on the damage to the economy has been sort of realized over the sort of COVID-19 lockdowns. So that is not likely to sort of help these markets to continue to rally, but considering that they've had so much sort of money plowed into them recently to drive them up this high, it would be sort of foolish to try and sort of step in until we get a signal to the short side. Now at the moment we don't have that. So again, at the moment, still looking for intraday opportunities, trading between these trading windows. Just one thing to sort of bear in mind, if the market does fail to make a new high here and rolls over and breaks the low, then just think we've got sort of kind of a double top formation, a failure double top formation forming here, which is a bit of a technical signal that may sort of open up some opportunities to the short side. So if we take a look at gold now, on Monday we were looking at gold around the 1700 level. Again, if we take a look at this on the 4-hour time frame, we're looking for the retracement into 1700, possible sort of opportunity here to sell the market to the short side and to take advantage of the continuation here of this move on the 4-hour time frame and this trend on the 4-hour time frame. What happened? The market sort of set up a bearish candle. It then sort of rallied on further, so it's broken the formation of this trend on the 4-hour time frame, and not looking quite so easy from a technical perspective on these higher time frames now either. One market that we are looking at though is silver. Now over the recent months, the sort of correlations between the structures, trend structures between gold and silver have sort of separated quite significantly, and you can see that silver here is already in a long trend on the daily time frame. It's sort of pulled back into this 17,700 price point. We're just looking here to see whether the market sort of finds support around here, and if it does, then we could start to get a move up here towards this sort of 1750 price point. Now the sort of thing that I'm looking for here to sort of give us that confirmation is if we come to the 4-hour time frame, you can see the sort of range that we've got formed here on the 4-hour time frame. What I'd like to see is the market sort of break above the top end of that range, the top end of these candles here, and get out of that sideways action. And if it does, then we could start to see a move up to 1814 and then 1850 on this sort of leg of the trend. Obviously, if the market sort of breaks underneath the sort of 1760 area here, then I think we'll sort of get a move down to the short side and we'll see that sort of rolling over. So if we come to the Forex markets now. Now the market that we were looking at on Monday here was Euro Swissy. If we have a look at this on the weekly chart, we can see that on Monday the market moved above this level here on the weekly chart, we'd sort of broken healthily into this sort of window here. We were looking for a pullback and then a move into the 1.1 level. And if you just sort of look back in time here, we've got a nice sort of trading window sort of formed there with not a great deal in between. However, as I said, we've had turnaround and switching from risk sentiment pretty much daily and or pretty much sort of every day, in fact, and the market has switched swiftly and broken below that level now. So not quite so easy from a technical perspective. On the daily time frame, the market is pulling back into the moving averages here, but if it does start a new long move here, does find support, we've got that level there to get through, and we saw how strong that level was on the weekly chart, so I wouldn't fancy trading straight into that. So some other markets that we're keeping an eye on here and liking are things like some of these yen markets like Aussie yen and Kiwi yen. If we just take a look at the yen here on the Kiwi yen on the weekly chart, we can see that the market's broken through the 70 level. It rallied up to 72 where it sort of found failure there. Both these levels are very sort of strong, significant support and resistance structures. So the market sort of found a bit of support at that 70 level. If we take a look at this on the daily, you can see that that's sort of brought it back, taken some of the heat out of this long trend here. If it does find a bit of support here, we could be looking for the next leg of that move up towards that 72 price point. And again, if we come down to the 4-hour time frame, you can see that we've got a bit of a range formed here now on that 4-hour time frame, and the bottom end of that range sitting at that 70 price point. So this is the area that we're keeping an eye on. Obviously, if the market breaks to the high side, we'll be looking at continuation of the trend. If this breaks to the low side, well then, on this time frame, we'll be looking at a move down to 69.50 in the near term, and then possibly a deeper move to the short side. So there's a few markets there that we're keeping a close eye on going into the second half of the week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.